Yo, what's up you guys? Welcome back to a new weekly market breakdown. And in today's video, I will give you guys an update on the market. We're going to take a look at the dollar index, the Nasdaq, as well as gold, the Dow Jones, and Euro USD from a technical as well as a fundamental perspective there as well. If you are new to the channel, welcome. A sub would be appreciated as I provide valuable educational content on a daily basis. If you do enjoy the content, please do consider smashing that thumbs up button there as well. Now, what we do know now and what we can forecast happening in terms of fundamental information is going to drive this decision that I have come to conclude today. Okay, very bullish on the dollar index, and I'll explain to you exactly why I say so. Now, we know that due to the negative correlation that the index have against indices and metals and commodities, we expect that inverse to take place on these commodities with the outlook being bullish on the index, but we'll cover the technical analysis here as well. So firstly, Elon Musk made a very good statement. He said that price really matters. Okay, he said that there's a vast number of people that want to buy a Tesla but can't afford it, so these price changes really makes a difference to the average consumer. Now, how does this work? And I'll tell you why I say so, right? Not too long ago, Elon Musk also stated that the feds are making it very difficult and for these companies, and we've seen a lot of the stock prices tumble, as we will look at the Nasdaq now, because Tesla is also listed on the Nasdaq, and we saw how the Nasdaq stock prices has been tumbling, but that's purely because of the outlook that investors has based off the sentiment where we are seeing the feds, which direction the feds are going to take the interest rates. So the statement that Elon Musk is making here is showing us that the impact that high interest have on consumers that are interested but they cannot afford to buy a Tesla, unless the Fed reduces interest rates, then more people would be able to spend money and then potentially the stock market can recover. However, as long as inflation is on the rise, interest rate will increases and the stock market prices will continue to deflate. And this is why this is a good example of how this the domino effect, how this basically take place here as well. Now, next up, we have the ISM services that came through yesterday. Now, beautiful thing happened. The dollar index was trading at previous support on the daily, and I'll show you what I'm talking about. And the news comes out at this level here. So we had resistance got broken, come back at support. The news comes out and it drives the prices higher. So the markets is like, broke above resistance, reached that level that I said in the last breakdown. We can expect the market to go on that clearance, pull back. News comes out right then. The market says, well, it's time for us to go back up again. We're going to get to that data as soon as I'm done explaining to you guys here. So no, I'm sorry, it was not that information. Here we go. Here's it. Wednesday. Yeah, today is what? Thursday. Oh, damn. Sorry. So we saw the news come out yesterday because I knew it was the PMI. I was just confused with the two. So we know that. So you can see how the market corrected itself. Basically, as soon as the news came out there as well, consumer confidence dropped a bit. But obviously, I think consumers are just confused, as everyone else is, about what's currently happening with the markets. But coming over here, okay, this is a article from Insider. It says the slump in stocks have a silver lining. As a silver lining, it shows investors has finally stopped fighting the Federal Reserve. What that means is that is the same thing that we see with people, with retail traders, right? The market sentiment is bullish, but they would go out and look for bearish sentiment. They will draw that trend line, and if the market goes up, then they'll draw that trend line, and if the market goes up, they'll draw that trend line. So they'll keep drawing that trend line as the market go up. The market is saying that we want to go up, but people draw that trend line so it can touch and drop. So it basically tells us that investors are now at a point where they basically go, okay, we understand which way the market's going to go, because what you realize is that every time there's a correction, there's obviously investors coming in to buy the stock price higher, and then the Feds come in and say, we're not going to lower interest rates, we're going to hike it, and then investors go, okay, we're going to, and then every time they think there's an opportunity in the short term, they buy the price, but then the investors come out, CPI is high, we have to continuously hike interest rates there as well. It says here stock prices declined this month as markets started pricing in more aggressive Federal Reserve tightening, which I've been saying month over month. But that's not necessarily bad news for investors, according to the Bank of International Settlements. Now, I don't care who says what. The reality is we basically go off what we know is a proof of concept, what we understand about the market and how it moves. That says here the sell-off makes it less likely there'll be an abrupt financial repricing later on. Economist Claudio Borio said, or whatever his name is. Now, I'm not going to go through the entire article there, but we understand that investors are now also lined up for what's about to come. Now, here's a lot of clearance. If you look on the monthly time frame here, we had this monthly close above this price, and it's only all the way to the moon now. And again, like I said, I anticipate the index to climb and go and test that 120.500 should be somewhere 120.500, which is the slippage for that resistance that we have over there. There we go. So basically what we are going to take a look at is some technical information. Now, if you start on the monthly time frame, what we can first see over here is the market obviously printed very important resistance, right? Resistance got broken. The market came back to test it as support, broke below support, came back, tested it as resistance, broken above resistance. All of that resistance is now again one support. Now, we do expect, like I said before, we've got a massive impulse, and we obviously expect a correction to the 0.382, and that is exactly where we expect the market to pull back before any corrective measure to take place. That is where I see the market pull, and then potentially we can see a pullback on the monthly time frame, which is going to obviously take some time because it is a monthly candle. Here on the weekly time frame, what do we see? Now, if you looked at that level that I identified, it's sitting basically right there in the neckline on the weekly time frame. What we have over here is we basically have this structural level that the market also broken above. We also have this potential W formation where the market came back to the neckline, confirming that continuation to the upside there once again. And then on the daily time frame, we can obviously see, like I've explained before, we have this impulse correction, and we obviously expect that continuation to the upside. We also have that massive impulse. So after an impulse, you expect a correction, taking the Fibonacci from the low to the high. The market basically came back, tested the 0.382, the 0.50, 61.8, and then came for the 78.6 of the Fibonacci taken on the low to the high. Now, we do have a minus 27 lining up perfectly with previous resistance, where we anticipate the market to continue to pull back, break above resistance, acting as support, and then from there continue the move to the upside for the market to complete the W formation as we identified from a weekly perspective. So I do expect the index to climb, break above, pull back, then climb again, and then just continue this move. You know, we could potentially see the first correction on there as well. Next up, we've got gold. Gold has given up some of the gains that we've seen so far, but gold is due for another move to the downside. The market broke below support, came back to test it as resistance. We obviously had this fake out to the upside, and I do expect the price of gold to continue lower. Now, if you are a trader and not not a like an actual trader, you would know that it's not a good time to just get in here, because you also want to wait for price action to develop. But I do expect the prices of precious metals to decrease in value, and we can probably target that level over there to the downside for the market to go and test that previous level of support there as a first point of reference. And this could be potentially be the start of a consolidation as we're looking out for the the NFP data next week. The Nasdaq 100 also printed an impulse. Now, to see how far the market's going to go down, you always want to make sure you get a 0.382 that's lining up perfectly with previous support that got broken, that is now acting as a level of resistance. Like, I feel like I should just add a beat to it, because it sounds, because it feels like I'm rapping. It's just like, you just need to get it, as you see, they're taking the Fibonacci from the high to the low. Make sure that you get the 0.382, that line now perfectly with structure. Make sure you trade, manage your risk. Don't be, that's just weird. I shouldn't speak so fast. But in any case, so what we do want here is we've got a previous level of resistance, of support that got broken, that is now acting as a level of resistance as a general rule of thumb. We obviously need to make sure we got a 0.382 lining up perfectly with this level over here. That is exactly what the market had given us. Now, we can expect the pullback, a correction on the Nasdaq, as the Nasdaq is also currently testing strong support. Now, pullback is expected for the Nasdaq. Where's my favorite tool over here for the Nasdaq? And then from there, once again, we need to monitor the price action and see exactly which way the market wants to take us. Next up, we've got the Dow Jones. Okay, so this was the analysis that I did on Friday. It was on Friday. On Monday, we could see the market dipped lower, tested that level, went up, and now we've got this level over here. The Dow Jones price action is quite different. As we can see here, the Dow Jones had broken below support, came back, tested it as a resistance, printed another red candle. And what I would like to see here basically is this could potentially be the start of a consolidation market. Okay, that is basically, you can see if you look left, a very strong structural level there. It's some people would say it's called a triple bottom, and then if you add another one, it's probably called quadruple, and then you add another one, it's like 5 triple. So as you know, if you've been here long enough, you obviously know we trade ranges. Wait for a clear break. I do expect the break to the downside, as I do not anticipate anything to come from this year as well. Euro USD taken out yesterday for 1%. Also, market printed such beautiful price action. Yeah, you can see we also have this potential of a W formation to the neckline, and then obviously continuation. But because we're looking for a bearish outlook, I would say that because we are currently heading for this structural level over here, the best way to look for sells is to wait for a break below that on the retest, then look for that continuation to the downside. In doing so, will the market also print a head and shoulders pattern, which is considered a bearish pattern from a technical perspective. Anton Snyman, SAIK, Kaapstad.